Thanks for tuning into Worldview. I'm your host, Neeraj Shah, and our guest today is somebody whose book back in 2016, I believe, or 17, literally changed the way I think about a lot of things around investing and around life as well, I might add. Though this conversation will be around investing largely. The person that I'm talking about is the author of The Education of a Value Investor. That is Guy Spier. He runs Aquamarine Fund out of Zurich, and he joins us right now on the show. Guy, so good having you. Thanks so much for taking the time out and being on Worldview with me.
Neeraj, it's a pleasure to be here. I feel like I have huge imposter syndrome, but I feel honored that you want to talk to me. And I hope that I'm going to be helpful to your viewers from my perch in Switzerland, from tiny Switzerland.
No, I'm sure you will be, because as you've said in the book as well, that you moved away from the noise to be able to get better perspective around what's happening around the world of investing. And I want to start off, Guy, by asking you about the same thing, that if one looks at 2023, in some sense, if you had told somebody that 2023 will see the advent of one more geopolitical issue, or maybe two, if you will, and a lot of other developments that have happened, any fund manager would have been skeptical about the kind of performance that risk assets per se have put up. To think that Bitcoin is the best performing asset is separate, but the NASDAQ, some of the other world markets haven't put up a bad performance. How does that augur for the investing world as we head into 2024, which will have 70 countries going to elections, with 2 or 3 very large ones, including India, and geopolitics now looking like being a permanent part of our lives?
Exactly. It always feels difficult, doesn't it, Neeraj? And we always feel worried. And having been doing this now for 25 years, what I've experienced is that the exact issues that you've raised now loom large. And for example, I mean, I didn't realize that there are 70 elections coming up next year. And my experience has been that in retrospect, those things that loom large are never as large as we thought they were. And the people who end up winning are the people who end up not having been distracted by those things. And so you're absolutely right to talk about them, because they're absolutely key. But our jobs as an investors is to put them into their proper perspective, which is that, something that I do, Neeraj, is that I don't read, I still get physical newspapers, but I don't read them daily. I grab them with me, and when I travel, I'll read through 5 or 10 of them. And it's always fascinating to see how the newspaper of 3 months ago, how little of it matters for the moment that I'm in today. So I think the answer is to pay attention, but not to worry about it.
Wow. Okay. So, and you're right. Maybe the actual risks come from the unknown unknowns and not the known ones. But if I were to ask you, Guy, what is it about 2024 that makes you constructive on risk assets like equities, whether US, whether India, whether some of the others, and what is it that may worry you from whatever little is known to you? What would that be? What would that list look like?
The list of things that bother me. So I'll tell you one very important thing that has started bothering me far, far less. I went into 2023 really, really concerned about how much carbon dioxide we're putting into the atmosphere, and worries about how we are impacting our environment. And somehow at the end of 2023 and looking into 2024, I think that the expectations and the goals of the policymakers was to get us to carbon neutral in 5 years. And I think that, and as I looked at some of the things that were developing, I mean, it's been an important thought for me that both India and China are building a lot of coal-fired power plants, and that was in complete contradiction to what many of the policymakers were saying, especially in the West. And what I realize now is that their time frame was just too foreshortened. I think that we're going to get to carbon net zero, as they call it, within 25 to 30 years, but it isn't going to happen within the next 5 to 10 years. And I've become more comfortable in understanding, for example, of the policy of India and China to be powering their economies using coal and using some more traditional fossil fuels for the near future, if you like. So I'm less worried about, I think that we will get there. I think that the planet will get there. So that's one thing that I'm less worried about. What I'm more worried about is the potential for regional conflicts to turn into a global conflagration. So we started 2 or 3 years ago, and we didn't have a Russia that was interested in taking over Ukraine or doing what it is doing in Ukraine. We didn't have a flare-up in the Middle East with Israel and Gaza. And there are always tensions around the straits between Taiwan and China and what will happen there. And that really does bother me, because when I read the history of the Cuban Missile Crisis in the 60s with Kennedy and Khrushchev, all the commentators say that we don't realize how close we were to all-out nuclear exchange between Russia and the United States. So that really does bother me. I think that the short answer is that there's not much I can do about it. There's not much that investors can do about it. And I take great comfort, maybe more than I should, from what Henry Kissinger said, which is that the world tends towards order. So the underlying interest, even though there are actors who make a noise, the underlying interest of the more powerful countries and economies is towards order. At the end of the day, whether it's China, whether it's the United States, whether it's countries in the Middle East, they benefit not from war, they benefit not from fighting, they benefit from finding a way to cooperate. And even as we see the conflagration in the Middle East, we see countries, responsible countries like Saudi Arabia and the United Arab Emirates and Bahrain, that are seeking order within that. And I would like to believe that the thing that bothers us the most, which is the potential for something to happen across the Straits of Taiwan, that at the end of the day, calmer minds will prevail. And what I would tell you, Niraj, is that from a simple investing perspective, so I love talking about these things, and it's always interesting to speculate, and it's your job in the media to focus on these things and to talk about them. But I actually do separate out. So I think about those things, but then in terms of investing, I'm trying to focus on longer term trends. You know, I take very much to heart words that originally came out from Jeff Bezos, and now is also the subject of a book by Morgan Housel, which is focus on the things that are not changing, focus on the things that stay the same. And I was talking to a friend, not that we have to just talk about India, but I was talking to actually one of my investors, a man from Belgium, who the family owns a drinks business. And I was talking to him about Sira, the Indian sanitary ware manufacturer. And I told him, look, no matter what happens across the Taiwan Straits, more and more Indians are going to want to have a bathroom inside their home. And the fact of the matter is there's a very, very large number of Indians who still need to get there. And so Sira's got a very bright future. You know? And so, you know, and at the end of the day, you know, there's another kind of fascinating thing that, you know, as we look for life in the universe and we don't find it, there are all sorts of theories about why we don't find it, because the probabilities say that we ought to find it. And there's something called the Great Filter, which says that all species at some point destroy themselves, which would be rather, you know, and we can't disprove it. It might be that when you get to a bit like bacteria in a petri dish, eventually they kill each other with everything that they're producing. They produce too many toxins and they kill each other and the whole petri dish dies off. Why do I say that? I cannot guarantee that we won't at some point as a species destroy ourselves. I really strongly hope and believe that that's not the case, but I can't guarantee, I can't rule it out. Most importantly, I can't change it. Whereas I can get super excited about all those Indians who are going to be using, going to have toilets inside their homes going forwards. And that's the assumption that I have to make. There are things beyond which we just can't influence ourselves. You get to talk about it, we get to debate it, but at the end of the day, we really have to rely on leaders in the Chinese Communist Party, the people sitting in the White House, to figure out a way of living without causing mutual assured destruction. And I'm very confident that we will. But there's no change in my choice of what to own based on my worries and speculations around those things. And there's no real change about my commitment to being pretty much fully invested either. And I really am focused. I don't own shares of Sierra, by the way, but I really am focused on those kinds of questions. Well, what is going to be in 25 years? How many Indians are going to be using toilets on the inside of their homes rather than somewhere else?
Got it. And viewers, I did it, didn't I? Guy Spier said in the first answer that I'm not focusing on the headlines, and then I still asked him about, hey, what about the headlines worries you? So yeah, we tend to do that at times. But Guy, thanks for explaining that in detail. Now, my question would be the overarching belief, and we'll get into the micro as well, but the overarching belief, Guy, for the investing world at large is that if central banks have dominated how the momentum ebbs and flows for risk assets, and if the central banks at large are going to be in the mode of rate cuts, the quantum may differ, and we can pontificate over it, but we can't get to the bottom of it any which ways. But the larger trend is that is what is going to happen. Could at large that be construed to be constructive for investing into equities? Yes, the long-term trends are as you described them, but the next 1.5, 2 years, could they be constructive at large for equities per se because of this action of central banks? Now, it is a known, but could that still be construed as positive? Do you take heart from that?
Yeah, I mean, obviously, one of the most difficult headwinds that has been in our face over the last couple of years has been this surprising, or maybe not surprising, actually, expected rise in interest rates. And as we know, central banks can affect short-term rates, but they can't affect long-term rates. And there's always the question of the central banks whether they raised rates too much, too far, and they get very, very loud voices on either side. And there's enormous pressure for them not to overly dampen the economy on account of inflation. And so they've been quite quick to recognize they will happily accede to the pressure. The world is a happier place when they allow interest rates to come down. So it is extraordinarily constructive for equities, but there are many, many other things that are extraordinarily constructive for equities. They are the place to be at the end of the day, and it is never worth allowing short-term worries about, for example, interest rates rises or continued high interest rates, for example, just one thing, to prevent us from wanting to own equities. So yeah, it is constructive, but I would tell you that my experience time and again has been that when for example, it is a red flag to me that Niraj is talking to me about potential interest rate cuts being constructive for equities, because if you're saying that, it's almost like I could almost half expect the opposite. And so we're always trying to be aware that if there's a kind of a common accepted wisdom out there about what's going to happen to interest rates, we will very often be surprised. It will be the exact opposite, simply by nature that idea is already out there and is being repeated. You know, the worst, you know, Niraj is still pretty well connected and at the center of things, but it's when the cab driver starts talking to you about declining interest rates, then you need to, then you know definitely. But yeah, you know, there are many reasons to own equities, and that is one of them. But even if that was not the case, it would be a good idea to own equities.
I completely agree, and therefore, in this first segment, we have established that Guy Spier, the nature of the investor that he is, does not worry too much about what's happening in the very short term. The longer term, holding equities is a good idea. Now, he mentioned that what he does think about are reasons or trends that would last for the long term, and that is what he focuses on. So what we'll do is we'll enter into a very quick break. On the other side of the break, we'll try and talk to him about that, both on the global front, and because Guy looks at India closely, we'll try and understand from him what within the Indian landscape sounds very promising to him. Stay tuned, we'll be right back. back with Worldview in conversation with Guy Spier. Just a small deviation, guys. Something that I remember, and it's a life advice, if not an investing advice. But in the book that I was referring to at the start of the show, there's a great hack that Guy Spier mentions that he writes 3 thank you slips every day to people who have helped him, and it's done him a world of good. I started doing that at some point of time after reading that book. I've been doing that almost consistently the last 5 years, and it's done me a world of good. Maybe it'll do you a world of good if you start doing that as well. I'm not going to ask Guy about that, by the way, because it's well established. But Guy, thank you for that advice. Now, I'm coming sorry, you want to make a point?
What I want to say, just to follow up on that, is that for the listeners, you will be blown away if you actually act and do it at the way it comes back to you, because it won't come back to you the way you expected it to come back to you. Okay. And then I'll just leave that little question there for maybe another time. Back to you, Niraj.
Yeah, no, we have limited time, Guy, and which is why I want to dwell a little bit upon Worldview on the investing part and not about life lessons. But it was an important one, so I mentioned it. Now, back to investing, Guy. We've established that you focus on trends that look appealing to you from a longer term perspective instead of worrying about the short term problems. I would love to understand, in the last 6, 12, 18 months, what has stood out for you as something that you may not have thought of earlier, but which became a trend? Your view got reinforced, and you now think, or you maybe have been thinking for the last 12 months, that here's something that will last for a better part of the decade or something, and people can seriously research about this trend and make investment decisions.
I mean, the one that is, it's funny because I was in extreme opposition to to Monish Pabrai, whom I'm sure you know very well. Outside of India, I call him my Indian friend Monish, and everyone laughs at me because they say, well, we all know he's Indian. But I think that it's been really astounding to me to see the disconnect between what and I guess I touched on this already, what policymakers are saying about our progression to net zero, only at the beginning of 2023 did I really understand and buy into how important it was for us as a planet to get to net zero, and actually not just net zero, meaning that we're no longer net on a global basis emitting more greenhouse gases into the atmosphere, but that we're actually finding a way to reduce the greenhouse gases in the atmosphere. So the policymakers would give you this impression that we're on a progression, that we're going to get there in a decade. And when I started looking at what was happening privately and what was not being talked about, was this massive disconnect that actually greenhouse gases are going to rise over the next 10 years, let's say. And even when we look at developed economies like Germany's been, because they went off nuclear fuel, have been burning and have been firing up a lot of coal-powered fire stations. So we have a vision, and I think there's a global vision that, for example, China and America buy into. When you have these COP28 talks, it's not like the developing economies of the world, the economies that are not yet developed the way Western Europe or North America is. It's not like they're talking a different language. They're also there and talking about getting to net zero. But to get there, there are going to be many hiccups, and there are going to be many things that we have to overcome. And so that, for me, is there are going to be pockets of inefficiency, and there are going to be pockets of shortages of, for example, certain raw materials that we absolutely need in order to get to net zero. And so what I would say to the listener is that, pay attention to the policymakers, pay attention to COP28, pay attention to the overall agenda setting that the world is getting to, but at the same time realize that on a micro level and on a more granular level, it's not going to be a smooth ride, and there are some opportunities that will be created as a result of that. The one that I've now been focused on is actually coal. Because it is actually so what we need to get to, the reason why developing economies like, and it's not just India, it's not just China, it's also countries like Indonesia, for example. If you if you start talking about solar panels and wind power and all of these other sources of energy, that is a very expensive, capital-intensive way of generating energy. And we're already plugged into a far cheaper way of creating energy, which is absolutely critical for growth. So I think that this idea of Bjorn, Bjorn Lomborg has talked about this. He's a Danish guy. We do a dash for growth. So the developing world is working hard on more carbon neutral sources of energy, but China and India and Indonesia and other emerging economies need to ensure that they continue to grow and fuel it with inexpensive energy.
Shunning away green, fossil fuel-based power was a trend in 2021-22. I think it's come back with a vengeance. What else, Guy? What else is looking interesting from a long-term trend?
It's interesting because that is the one that I've been focused on. A second trend that I don't need that many good ideas, and I've been looking hard for other ideas, but ended up with that idea. I haven't really acted on. Actually, forgive me. So you kind of caught me. I thought one was enough, but
one is enough, Guy. One is enough.
No, I have Niraj. I have another really fascinating one actually, which is exciting and interesting. Is the growth of air travel. So it turns out that I hope. Well, I'm going live. I'm going on air with this, but please check this number. I know the number is directionally correct, which is that it's something like 15% of the world's population has actually flown on a plane, and the vast majority of the world's population has not even flown on a plane. And there is absolutely no doubt that eventually all 8 billion people or whatever population we get to on the planet before we stabilize are going to want to travel. Travel is this basic that people want to do. We see that travel increases every year, except for very unusual years, for example, through COVID, or when you have a very, very prominent terrorist attack like 9/11. And then it declines for a bit. So what does that mean? That means that we're going to need far more airports. So the use of airports, and actually, funnily enough, again, with my Indian friend Monish, I visited a Turkish airport company called TAV, but there are a number of others as well. So airports, airplanes. So simply flying the planes that transport the passengers around, the aero engines that drive those planes around. Yeah. Go ahead, Niraj.
No, sorry, Guy. Please finish your point.
Yeah. So I think that what I get, anybody who's a financial analyst would get excited about is that these are kind of like. There are many industries or there are many businesses where you can't rely on endless growth. And sooner or later, it comes to an end. It stops for one reason or another. The market becomes saturated. But this is an industry and a demand that is kind of a source of endless growth, if you like. And endless meaning that for the foreseeable 20, 30, 40 years, we're going to see regular single-digit increases in the number of passengers traveling. And that drives the demand for airframes and the demand for engines and the demand for airport space. And so that's just a really, really fruitful area to look. And now that you've got me on a roll, Niraj, we'll see if you want to dive into that. But I'm going to give you a third one, which actually really, really applies to India, but it applies globally, is that as economies grow richer and as the world grows richer, the financial sector grows. Something that people find hard to understand is that the amount of outstanding credit grows. It grows to multiples of the underlying economy because people are engaging in more financial transactions with each other, whether that's short-term loans through credit cards or companies borrowing money from banks, companies issuing money, debt being repackaged into various different kinds of securities which contain debt within them. What does that mean? The businesses that are engaged in the financial markets, and of course, as you know, I love the credit rating agencies, are always going to be interesting places to invest. And that ranges from the world credit card networks like Visa and MasterCard to credit rating agencies, also to financial exchanges. And so the finance industry has always been an interesting place to be. So there's just another trend for you.
Thank you so much for being on the show today, and have a great new year ahead.